What's going on, guys? Bexio, and today we got a brand new video with Papa Powell back to pumping the market. So he had the FOMC meeting today where he talked about basis point hikes, all of these different things, the interest rates, inflation, the problems going on. And he came out and said a pretty big key things where the market loved it. It was amazing to hear. And the market is just up so much. Bitcoin's almost at 40K again. So a lot of things just rallying off of this news. And it might be a sign that we hit peak hawkishness or peak fear, however you want to call it. And meaning we might have bottomed out on the market, all markets, which would be a good sign. But these are the things Jerome Powell said during his meeting. Fed raises rate by 0.5 percentage point, the biggest hike in 2 decades to fight inflation. So that itself is pretty big. You know, the biggest hike in 2 decades since 2000 is pretty ridiculous. But we got ridiculous inflation now too. So we got the big points out of this is just the Federal Reserve increased its benchmark interest rate by 0.5 percentage point in line with market expectations. So that is the first good thing. The market was pricing in, thinking the 50 basis point, 0.5% hike was coming. It did come, and it wasn't worse. It wasn't a 75 basis point hike. It wasn't anything super more ridiculous than what the market thought. That's good sign number one. And then in addition to central bank outline a program which will be reducing its bond holdings by $95 billion a month. Now, this one is a little bit of a problem for the bond market where we saw rates were going up and up and up. Things were getting really good. I mean, the 10-year got to like 3% a couple days ago. So massive moves in the bond market. But the massive selling, is there enough people to buy the bonds, $95 billion worth of bonds per month? Is there enough people buying bonds to cover that? And if there isn't, then the rate is going to have to move up. When you are selling bonds, the rate goes up. When you're buying bonds, the rate goes down. So we could see bond rate continue moving up. And then we see the rate moves the largest since 2000 in response to inflation pressures. That is true. Obviously, we already know that. Biggest move since 2000. And then finally, this is another massive good thing that the market liked to hear. Fed Chairman Jerome Powell underlined the commitment to bringing inflation down but indicated that raising interest rates by 75 basis points at a time is not something the committee is actively considering. Market loved that. We don't want to deal with these massive hikes up, especially when the Fed said they were going to do it slowly and slowly increase rates. And then they've turned course and said, you know what, we're doing a 0.5% increase right now. So does it really mean anything if he's out here saying, it's not something the committee is actively considering? Does it really carry any weight? I mean, the market thinks so. The market's rallying off of this type of news, but the Fed could flip on this at any point. I mean, they flipped on everything else they've said. So why is this any different? I think that's the only thing here where it's good to hear. It's good to hear them say we do not plan on doing this, but at the same time they said we do not plan on doing things like 10 different times in the past year, in which case they flipped around and did those things they said they were going to do. So we'll see if they hold true to that. If they do, great. If they don't and they surprise the market with this, it's going to be a red market. But all of this news, kind of good stuff. What the market expected, raising rates by 0.5 percentage, expected that. Expected the bonds to be getting sold, reducing their holdings. Expected that. I think we were expecting like 100 billion a month, so 95, a little bit under that, and then 75 basis points not coming at least anytime soon. Very good news. If we look at the bond, 10-year Treasury bond, so this is the 5-day, so you can see the kind of volatility here we had, and recently the sharp move down. Kind of peak hawkishness might have been gone. If we zoom in a bit on this, we can see the much more steeper move down here from almost 3%. The high is just over 3%, and then it's just kind of moving down here. So maybe we've reached the point of peak hawkishness, peak fear, where people can finally turn around and start doing normal things in the market what the market was doing before, instead of focusing on being fearful, focusing on these rates, focusing on all these things. It's been happening for so long now. These are always going to be events the market reacts to, but maybe we're getting over it just a little bit. And if we look at probabilities for what future markets are pricing in, so we have interest rate futures suggest 94% probability of effective Fed funds rate of at least 2.75% at the year end. So they would expect we get to 2.75% by the end of 2022 at almost a guarantee. So very close to that. And then interest rate futures suggest 35% probability of Fed funds rate of 3 to 3.25% at the end of the year versus a 52% before the FOMC meeting. So it was higher, almost over half a chance that the federal funds rate could get to 3 to 3.25% because of a possibility of a 75 basis point hike, with Jerome Powell saying we have no interest in doing that. You get that coming down to 35%. They could still flip at any time. That's why it's not zero, but it's extremely less likely if they're not going to do a higher basis point hike, because the only way they get to these numbers is by hiking higher than what they plan to do. So futures market kind of enjoying this, bringing down the probability of insane rates by the end of the year. And that just affects how money flows and all these things. One super interesting thing about Jerome Powell, and he said, this is obviously from him saying, nothing suggests in the economy suggests it is in a recession. Maybe a typo here. Nothing suggests in the economy suggests it is in a recession. So this is the only thing that's kind of weird, because there is something that suggests we could be heading to a recession, which would be the negative GDP print we got at an absolute unexpected time last quarter, which was expected to grow at 1%, and we actually went down -1 and at 1.4%. So that's the first kind of suggestion. Maybe things aren't going so well in the economy. I would say, I mean, I'm no economist, but I would say that might suggest, problems going on. But Jerome Powell says nothing suggests it, so nothing suggests it, just like inflation was transitory. So we'll see how this plays out, if he turns out being right or turns out being wrong yet again. We can see right here just the sea of green. Literally every single thing here green, except for market volatility, which is down because of the moves up in the market. So the only thing down is volatility. Everything up, prices of everything going up and to the right. Pretty good. I mean, Google up 4%, Apple up 4%. These are ridiculously insane moves for these companies. These are giant companies. So, but if we look at the S&P by itself in its own little space here, I had this line from the downtrend that we had earlier in the year, broke it, and we actually came back down, pretty much tested. I mean, we went below it, but it was pretty much tested. We came back up, bounced off it, and here we are in a little bit of a rally mode. Good to see. Will it be sustained? That's another question. We've seen it time and time again here. If we go back, a little bit of a rally gets sold off, a little bit of a move up gets sold off, big move up gets sold off. So the question is this going to get to be a move up and then just ends up getting sold off like we've been doing literally all of this year? Even things like Bitcoin are just looking great. I mean, almost $40,000. Just massive moves up from Bitcoin off of this news. No insane basis point hikes. It's just reacting back to the risk on. If we've reached peak hawkishness, peak fear in the market, then we can go back, and Bitcoin is seen as a risk asset by many investors. And if we've already gone past peak fear, then it could be time to get back into the little bit more risky assets here. So Bitcoin reacting super well. Even if we just zoom out on this chart here in this channel, reacted amazing. We've bounced off the top and bottom here quite a bit. We're hovering around the bottom for a few days here, and just a massive pump here to almost $40,000. Just great stuff. Good scenes out of everything. Every asset looking great. We'll see if it continues to rally or if it rallies into a sell-off. Just nobody knows what to expect with this market. But at least we had a good FOMC meeting. A lot of the news was to be expected. Nothing surprised us, and they said they're not planning a massive rate hike anytime soon. So combine all that, and we get the massive sea of green in the market. But for right now, we'll see if the rally holds. We'll see if we get a sell-off. But Jerome Powell has pumped the market instead of dumping it this time. and it feels a little bit better. But that's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers, and I'll see you guys in my next video.